Welcome to another deep dive. Today we're plunging into the latest from PB Fintech, the parent company behind Policy Bazaar and Paisa Bazaar.
Right. Two names most people would probably recognize.
Exactly. And we've got a good stack of sources, their official filings, the Q1 FY26 earnings release, and even some analyst questions that help frame things.
Yeah, plenty to dig into.
Our mission for you today is really to cut through the noise, pull out the key insights, and understand what's driving PB Fintech, the challenges, and the strategy. Okay, let's unpack this. So let's kick things off with the big picture. What are the headline numbers that immediately grab your attention from this quarter?
Well, the scale of the growth is pretty fascinating. PB Fintech reported a 33% jump in operating revenue to about 1,348 crore.
Okay, solid top-line growth.
Solid, yeah. But the real standout, I think, is their profit after tax, the PAT. It grew an astonishing 347% year over year to 85 crore.
Wow, 347% is huge.
It really is. And if you connect this to the bigger picture, this isn't just a one-off, right? Their PAT margin went from negative 47% back in Q1 FY22 all the way up to 6% this quarter.
That's a massive turnaround.
Huge. And revenue's been growing at a 54% CGR since they went public in late 2021.
Okay, that 347% PP growth is definitely the headline. What were the key drivers behind that, especially when you look at their main businesses?
So the core online insurance part was a major contributor. That revenue was up 37% UI to 632 crore.
Right, Policy Bazaar.
Exactly. And their total insurance premium also grew 36% to over 6,600 crore. But here's an interesting nuance.
Okay.
While their total lending dispersal, so all lending grew significantly, 123% UI, their core credit revenue actually saw a decline, down 22% UI, and core lending dispersal was down 33%.
Huh. So overall, lending up massively, but core credit down. What's going on there?
It's just a strategic shift, maybe focusing differently within their lending operations, perhaps moving towards more secured loans or different types of products.
Okay, now that's interesting. Huge paddock growth, even with a drop in core credit revenue. What does that tell you about their efficiency or maybe their focus?
Yeah, it definitely raises questions about cost structure and how different parts of the business are performing. Their overall adjusted EBITDA grew 81% YoY to 89 crore.
That's strong.
Very strong. And even their new initiative segment, the ones that often lose money early on, their adjusted EBITDA margin improved quite a bit from negative 12% to negative 6%.
So really tightening the belt and focusing on profitability across the board, it sounds like.
Exactly. It suggests a sharp focus on improving efficiency everywhere.
Let's break down these segments then. What's the story behind Policy Bazaar, their core insurance business? What's driving that impressive growth, especially you mentioned new health insurance?
Yeah, Policy Bazaar's mission, Har Family Hoagie Insured. Every family will be insured seems to be hitting the mark. Their online new health insurance grew 65% YoY.
65%, wow.
Which helped drive a 46% growth in their new protection premium that's health plus term insurance combined. And a key driver for their long-term profit growth, is the renewal and trail revenue. That hit 725 crore on a rolling 12-month basis.
That's the sticky stuff.
Exactly, up 43% from last year. And specifically for insurance, the quarterly renewal revenue is now at an annual run rate, an ARR, of 673 crore. That's up 47% YoY.
So people are signing up and staying. But how are the insuring customers are happy, especially when, you actually need to make a claim? That's the moment of truth.
Right. And their customer satisfaction, the CS score, is consistently above 90%. They've put a lot into claim support. They offer on-ground help in over 200 cities with a 30-minute turnaround time for health insurance.
30 minutes, that's fast.
It is. And you see these powerful testimonials they share from people getting help even when they're overseas or during really critical family health issues. It seems pretty seamless for many. For motor insurance, they have this assured delivery program with a 94% CSS, and it cut the turnaround time by 30%. They even have something called Claim Samathan Diwas for real-time reviews of rejected claims.
So a deep commitment beyond just the sale.
Absolutely. It shows they're focused on being there when it counts.
What about their digital side? How much is tech really driving this?
Oh, it's huge. Over 80% of motor 2 and 4-wheeler and travel insurance sales are unassisted now. completely digital.
80%, that's high adoption.
Very high. And they're using AI quite a bit for things like fraud detection, risk assessment, using digital variables, voice analytics, lots of historical data.
Right.
This helps improve claim settlement ratios for their insurance partners. And it allows for what they call high-quality customer disclosures, basically, getting better info up front than maybe through traditional agent channels that can sometimes have issues with fraud.
Makes sense. How are they reaching people across India, though? Especially beyond the big cities?
It's a diverse strategy. They use TV ads in regional languages, Tamil, Telugu, Marathi. They offer sales support in 18 different languages across those 200-plus cities.
Meeting people where they are.
Yeah. And they even use humor, like with Kapil Sharma, the comedian, to explain complex stuff like term insurance. But the key is really their phygital approach.
Digital, okay.
Yeah, combining the online B2C platform with an offline push through retail stores, actual physical locations, and in-person appointments. It adds that human touch, builds trust.
Right. That hybrid model seems important in India. Okay, so insurance is strong. Let's switch to Paisa Bazaar, the credit side. Given that moderation in core credit revenue we talked about, what's the strategy there?
Well, Paisa Bazaar's mission is Har Sapna Hoga Sak. Every dream will come true. It's really focused on financial wellness. They're actually India's largest credit score awareness platform.
Oh, interesting.
Yeah, 5.3 crore consumers have accessed their free credit scores through Paisa Bazaar. That's over 16% of all active credit score consumers in India.
That's significant reach.
It is. And they offer scores from all 4 bureaus, insights in 7 local languages. It's quite comprehensive. Now, about that core lending decline, it seems very strategic. They're focusing now on scaling secured credit and building out a broader financial wellness platform, introducing things like fixed deposits and bonds through PB Money.
Diversifying the offerings.
Exactly. Their loan dispersal ARR is still huge, around 28,000 crore, and card issuance ARR is about 4 lakhs. So it's less about just pure core unsecured lending volume and more about building a sort of safer, broader financial hub.
Got it. And how are they engaging consumers in this, slightly shifted credit market?
They get creative. They launched this thing called the Credit Premier League, CPL, like a campaign.
Yeah.
It got over 4 million participants in just 4 weeks across 710 cities. Huge engagement.
Wow. How'd they manage that?
Multi-channel marketing.
Yeah.
Collaborations with like 35-plus influencers, Ratrana Raneda, Ranveer Labadia, Jitam Bhagat, using meme marketing, vernacular content, really trying to connect deeply.
Sounds effective.
They also run internal contests to boost credit awareness. And crucially, on the risk side, they're building machine learning fraud detection models with their partners, using industry data to spot higher-risk customers early.
Proactive risk management.
Yeah, aiming to be a platform that helps avoid fraud and promotes sustainable lending.
Okay, so clear strategies for the 2 main pillars.
Yeah.
What about the new initiatives? PB Partners, PB for Business, the UAE Ops?
Yeah.
How are they doing?
They're showing really strong results, actually. PB Partners, the agent aggregator platform, still the market leader, over 350,000 advisors.
Wow.
And get this, they're in 19,000 PIN codes, covering 99% of India, and 77% of their business comes from Tier 2 and 3 cities.
Really reaching deep into the country.
Absolutely. They're using tech and training programs like Aram and Pathshala to boost efficiency there.
Okay. And PB for Business.
That's the corporate insurance side. It's seen phenomenal growth. Premium expanded 11 times in the last 4 years. They're using tech-based solutions for policy management for companies.
11x, it's huge growth. And the UAE.
Also booming. Premium up 68% YoY, and the business has actually been profitable for 2 straight quarters now.
Profitable already. Interesting.
Yeah. They offer unique things there, like cross-border health insurance for NRIs covering both UAE and India. And they have motor insurance assurance programs, plus they help partners with fraud prevention over there too.
So these new initiatives are actually quite significant contributors now.
Definitely strategic growth engines, yeah.
It really sounds like tech, especially AI, is just woven into everything they do. Could you give us a quick sense of how they're integrating AI across the board and maybe how that fits the broader India market context?
Yeah, absolutely. I mean, stepping back, PB Fintech is perfectly positioned for India's macro trends, right?
Like the growing middle class, digitalization.
Exactly. Growing middle class, super young, tech-savvy population, 56% millennials and Gen Z. Smartphone use is soaring, projected 75% by next year. Digital payments are exploding. Plus, you have government initiatives like the Digital Public Infrastructure, DPI, creating this fertile ground for fintech. But, and this is key, financial services, especially insurance, are still massively underpenetrated in India.
Huge room for growth, then.
Enormous scope. And that's where their AI strategy comes in. It's enterprise-wide. They use it for customer experience. Think AI, video credit reports, chatbots, sentiment detection.
Okay.
For smart marketing, personalized nudges, figuring out the best channel. For fraud and risk control, ML models, spotting weird behavior, forged documents, smart disclosure engines.
Sounds comprehensive.
It is. Also for operational efficiency, automated quality checks, detecting mis-selling. Even for engineering productivity.
Yeah.
It's central to how they see future growth. Technology and data are core.
Of course, operating in financial services means dealing with regulations. Anything significant on that front they're navigating, according to the sources? Does this pose any kind of headwind?
Yeah, so they have disclosed some ongoing regulatory and tax things. Policy Bazaar had IRDAI inspections, that's the insurance regulator, about compliance.
Okay.
They've responded, put systems in place, but they're waiting for final updates from IRDAI. Management says they don't expect it to have a material impact.
Right.
Then Paisa Bazaar had inquiries from the GST intelligence folks, DDGI, and the Income Tax Department about input tax credits and vendor stuff. They've made some payments under protest and filed appeals against certain orders. There are also some allegations under the Benami Property Act.
Okay. Sounds like a few different threads there.
Yeah, but again, management, based on legal advice they've gotten, believes these aren't sustainable and don't need major financial adjustments. So ongoing, but they seem confident it won't derail things.
Okay. Looking ahead then, any exciting new developments or strategic moves we can anticipate? Where might they be heading next?
Well, they're definitely not standing still. One big thing is their subsidiary, PB Pay Private Limited, got an in-principle nod from the RBI, the central bank, to be an online payment aggregator.
Moving into payments. That could be significant.
Could be a whole new vertical, yeah. Also, PB Fintech approved some pretty big unsecured loans to its own main subsidiaries, up to 300 crore for Policy Bazaar, up to 100 crore for Paisa Bazaar.
So fueling the core businesses.
Clearly indicating continued investment there. And one other interesting shift, their investment in PB Healthcare Services was diluted. They now hold about 40%, so it's reclassified as an associate company, not a full subsidiary.
Adjusting the portfolio.
Exactly. Shows they're willing to adapt and evolve where they focus their capital.
So wrapping this up, what really stands out to you after this deep dive? We've seen impressive profit growth, sure, driven by strong insurance performance, that strategic pivot in credit, and these new initiatives really taking off.
Yeah, and the commitment to tech, especially AI, is undeniable, plus that phygital approach to really cover the map in India.
Absolutely. Which brings me to a final thought for you, our listener, to mull over. We talked about how impressive the digital growth is, but also how financial services, especially insurance, are still so underpenetrated in India.
Right. Massive gap still exists.
So how might that dynamic, the underpenetration, coupled with PB Fintech's strategy, the deep tech integration, the phygital presence everywhere, that focus on customer support, how might that truly redefine financial access for that next wave of consumers, especially in India's Tier 2 and 3 cities?
Good question.
What potential does this hold? Is it just about convenience, or could it be a fundamental shift in how financial security actually gets delivered to millions across the country? Something to think about.